Greetings, Algo Arsons, and welcome to the October 13th edition of the Algo Factory Weekly Forex, Crypto, and Stock Forecast. We're going to start in the data, we're going to jump into the charts and talk about what's coming this week, and we're going to do that right now. Remember, nothing we say is investment advice. Please pause and read this disclaimer. Okay, we're looking at Forex Factory here. We're looking at the calendar for this week. And what's coming up is a holiday. Holiday on Monday, so the markets will probably be really slow. And I probably will not trade until at least the Tuesday New York Open, if not after that. So let's talk about the European Open on Tuesday morning, which is at midnight EST, the claimant count change for the GBP. So if you're trading in Forex markets in the British pound, then there might be some volatility right at the open. And then at 8:30 AM EST, some Canadian news, their CPI is dropping, and that'll be a pretty heavy hit if the estimates are far away from the reality. Same thing with the GBP the next night, and the New Zealand dollar at about 5:45 PM the same day, October 15th, same data quarter over quarter CPI, which is possibly heavy hitting for the New Zealand dollar. If you trade in the Kiwi, then that can be an issue. And if you trade in the cable, you'll get the CPI data at the European Open on the 16th. That's Wednesday. 8:30 AM, the AUD, the Aussie dollar, has employment data coming out 8:30 AM. No real US news to speak of until Thursday. And every Thursday we do get the unemployment claims, but also we're going to have retail sales data coming out all at 8:30 AM EST, right as the Algo Factory Live Lab starts. And the Europeans will have, right before that, 15 minutes before that, the main refinancing rate. So basically like their FOMC, where they talk about their interest rate for the euro and their monetary policy statement. After that, they will have their press conference at 8:45 AM EST. And that might go, I'm guessing, 30 minutes. And what they say during that conference can move markets as well. So I'd be careful trading the euro until that's all done. Friday the 18th, again at the European Open, we got the British pound retail sales data. That's midnight EST. That's what's happening. That's the data, and that's on the calendar. Let's jump over to the charts. Let's start on the euro versus the dollar, and then we're going to get into a couple of Forex charts, run through the SP 500, the Dow, the NASDAQ, and we'll hit Bitcoin on the way out. First, we got the euro, and the euro is at a point where it may, like we talked about last week, kind of go sideways. If you look at last week's video, it did pretty much what I said it was going to do, where it might step down just a little bit from where it was last week. So let's go ahead and map that out. So the Monday open last week is right about here, and the euro opened up, headed up to about $1.10 or so, and then slumped down, made a deep dip into about $1.09, which is a pretty big move in Forex, and it made sense because you had a fair amount of price action going on right here back in August. So price is digging into that liquidity, and right now it's a question of, is it going to bounce off of the top of this prior consolidation right here that goes back all the way to the beginning of the year, more or less. You had a lot of price action between here and here, a lot of bounces in those areas. And is price going to bounce off of that and head back up, or is it going to dig down and head down? And you know what, right now I'm kind of 50-50, and the algos are telling me right now that yes, we might see a move up, but the higher time frame is rather bearish. The weekly chart is pretty bearish on the algos, so we might see a move down. However, what we might see is both. We might see actually a bounce up and then move down after that. So what does that even mean? What does it look like? Let's look at the daily chart and map that out. Okay, so here we are back on the daily chart, and we do have a bit of a low here. We might see price revisit that low and possibly bounce. We don't know exactly where it'll bounce or even if it will, but it could come down to this area rather slowly, bounce back up to some level, and then head back down after that. That's kind of what it looks like it wants to do. However, as price bounces up, that could flip the higher time frame algos, and price might want to continue from there. And I don't really trade on this time frame. This kind of prediction doesn't really matter to me. It's just a good way to understand what the market might do. What really matters to me is what's going to happen in the next few days or even the next few hours. Obviously, the market's not going to have a lot of volatility most likely until Tuesday morning. But if we look at the lower time frame, we can have an idea of how things might go right here. So this is a swing trading time frame. We're looking at the 3 hour. We have a little more data. At the moment, it does appear that price might actually head up and grab some liquidity up here at this $9.7, right? We have a lot of liquidity from our volume nodes. After that, price may reject because there's not a lot of volume in recent history grab. So price might simply bounce right off top of that and head down like this. There's always the chance that it continues up, and if it does, we have some ways to look at that on a higher time frame. But I get the feeling, especially over the next couple of days, price is not really going to move a whole lot, and it'll probably just stay in this area. It'll probably reflect what we're seeing right here, this range. It's probably going to run back up into this range and stay up in that range until something else happens. Again, it's going to be a quiet few days. Once the market starts to wind back up again, then it might be more helpful to look at the higher time frame to sort of determine what might happen then, because we have a few days before that happens. So let's go back to the daily, and I'll use some tools to map that out, and then we'll go through the next few charts a little more quickly because they're going to be very similar. Let's go ahead and have them move down here. We'll use our Fibonacci tool. We're going to treat this as an impulse down. We don't know if this really is going to be the impulse because we don't know if price is going to stop falling. It may continue down, and everything on that draw right now just is no longer valid. But if price does bounce up more than it already has, we might see something like this. And again, this is super formative. We don't really have as much data as I'd like to make this prediction, so don't take it as gospel. But there's a good chance we see price maybe head up and grab a 382 over this week. That might be what happens. It might be just kind of a slow week because this is a strong move. And anytime you have a strong move, you tend to have at least a few days of not a strong move. For example, you have this move up to here, and then you just have it go around for a few days in this area. Not a lot going on in this area, right? And then it makes a strong move. So it's usually a strong move, then nothing, then a strong. Pretty typical, and it makes a lot of sense. So if that's the case, I'd say this is the most likely thing to happen, but it also could be like everything happens down here instead of up as high, and it might not even make it to that 3-2. It might simply bounce off of some of this and head down. It might go up to a 6-1. A million things could happen, but this is the most likely kind of a scenario that I'm looking at, is a move from here, a little sideways action for the New York Open on Tuesday, and then maybe a pop up to here, and it really depends on what the algo is going to do. The thing is, I can take a look at the algos at that time and make some better decisions at that time. So it's going to be pretty much a day off for me on Monday, aside from other types of work. Let's run to the cable. It's going to be very similar. GBP USD, I'm going to go ahead and draw a fixed range to grab our volume nodes, and price will be cozy in this area. It may go down. Again, there's really not any reason why price can't go down, but below and above the square, there's not a lot of volume for price to grab. So we don't really have any immediate reason for it to go down, right? Not from a volume standpoint. So we'll make this particular chart an assumption that it's going to go up, and then we'll talk about what happens if it does decide to press down through those supports. And those supports are sitting right at about $1.30. So our 382 is going to be up here, and there is some price action that would justify a move up to 382. There's no volume practically above the 382, and there's not a lot of volume above this box that I drew. So let me go ahead and get rid of the volume nodes and make this a little bit cleaner of a chart. And again, I think there's not going to be a lot happening over the next couple of days, but when those days are over, we might actually see price make its way up to that 382. And the top of this wick right here, this spinning top doji right there, that's where price might make its way up to and bounce off of right here. Now once that happens, if the high time frame bearishness does continue, and it may, because you can see right here, if you're with Algo Factory, you know what you're looking at here, especially one particular indicator, there is a fair amount of bearishness. It could flip at any time, but if that continues through this period where price pulls back up and grabs that 382, what we might be looking at, I'd say the 1.618 would be kind of the extended target, but you could see it down at this 272, and those respective numbers are going to be $1.27.7 for the 1618 and 129.12 for the 272. Let's take a quick look at the USD/JPY, and we'll probably end the Forex look right here, and we'll move on to the stock indexes. If you all want to see more Forex charts, because I'm more of a Forex trader than anything else, please let me know. I'll be happy to show that to you. So what we're looking at here, though, is kind of a finished product of what we saw based on the other charts we just looked at. You had this big impulse down. It looks like it made a 382 pullback, and surely it did. It touched that 382, and it didn't quite make it down past this 272, though. It bounced on this old support right there, and now it headed back up into this territory. So it appears that the move down here, at least for the moment, is done, and you're seeing price create what may end up being a bit of a range. If price were to reject down at this point, then I might be comfortable saying that a range is being created as such. This makes a lot of sense. Price might bounce down here. It may or may not. We'll see about it. There's no way to know as of now. If I were to take a look at the algos, I'd give you an idea of what I think will happen. I'd say things are rather bullish on the daily, right? And they're rather bullish on the weekly. So if anything, what I think may happen is we might actually see price head back up. Now it does have to break above the top of this box, which that number is basically going to be 149.41 yen to the dollar. So if price breaks above that and stays above that for at least 2 or 3 days, then there's a good chance price is going to actually head back up. And if we just look at the fibs, our number is going to be 153.96. So I do think there's a good chance that the trade is going to look like this. Break above, maybe a pullback, and then grab that trade. So a nice long, even if it looked exactly like this, and it may not, you might be able to see a good maybe 4 or 5 to 1. That's just a drawing. It could be way different than that, but that's a 2 to 1. That's beautiful. If it happens like that, that's a great trade. 2 to 1 is beautiful. Now, of course, course, price could continue to rotate in this area, and we'll have a better idea again as the markets open and as volatility hits starting on the New York Open on Tuesday. Now, this is the USD JPY, and the USD component might be what slows things down. We do have other JPY pairs, and those other markets are not going to be closed on that day, so we could kind of take a look at those and use those as clues as to what might happen. But for now, I think we're going to see sideways action, maybe a pop-up. So if anything, it might happen like this, where price goes sideways for a couple of days and then pops up above. And that's the USD JPY. But as of now, I can say that it's rather bullish. So if we do get a break above that 149.40 or so right there, and it stays above that for 2 or 3 days, we're looking at our breakout. And a lot of people who are the more risky type of traders, they'll just take that trade right then and there. Let's move over to the ES1, aka the SP 500 futures. And we got all-time highs going back to the end of last week. In fact, I think it was Friday where it just broke right above. Let's move over to the daily chart. And this is bullish, and it's always been bullish, and I think it'll always will be bullish. Yes, you're going to have some times when there's pullbacks. This is basically all of the money from 401ks and people around the world cramming their money into SP 500. The SP 500 outperforms many of the major hedge funds. Price came down to touch that all-time high and continued back up. Look at this. And again, this is on the weekly chart, but you had that all-time high here, and then price simply broke above, came back to retest right here, and then just kept going up. And that's great. Kind of a no-brainer to put your money in there at this point. Now, it doesn't mean that it can't crash. You have stock market crashes. You have a lot of things in our system right now that make calculation very difficult when it comes to what happens if this, what happens if that. So I wouldn't just put my money in there and not think about it. But it is pretty steady, and it's been steady for a while. And I do think they're going to continue to either cut rates or not hike them and cram money into them in the near future. And I think unless we see some kind of a war or something extremely serious, a black swan event, things that are pretty much unpredictable, I do think this is going to steady up. Now, a lot of people scoffed when I said we might see 6,000 by the end of the year, and a lot of very smart people scoffed, and I don't think they're scoffing now. We're only in October, and we are really approaching 5,900 very quickly, so 6,000 is very possible, and again, it's nothing but bullish. So what would I do if I were trading the indices? I'd look at this most recent consolidation as some kind of support, and price already came back and grabbed that. Now, I would be careful on the open. I would let at least the open happen, see how price is behaving. Obviously, this is the futures. We would be able to trade those a day before the open, or at least several hours before the open. But I'd let the New York Open hop on before I took any trades based on that. And then if price came down and bounced off the top of this, or not, even if it just kept going up and never even made its way down, maybe it just came like this and bounced. Either way, I'd be fine with that. I would take a look, and as long as the algos said that I could go, I would go. Now, if I were in kind of like a higher time frame trading scenario, what would I do? I would take a look at this impulse up from here to here, and I'd take a look at that 618 target as a potential place to take some profit. And that is right at 59.15, right about there. I might kind of front run that, although I don't know that a lot of people are looking at that target. They might be, they might not be. It's not a very obvious target, but whenever you're in price discovery, Fibonacci's are kind of the more popular way to take a look at targets. So I would imagine a lot of people are looking at the same thing that I am, and I might take profit a little before that, right? Now, there is the 272, which price pretty much already bounced off of, so I would expect to trade if I were to take one, and if the algos said that I could enter to look something like this. Now, this is pretty high time frame for me. I tend not to trade on that. I would rather scalp, and I'm trying to find a good exchange, good platform that'll let me trade the SP 500 using my current trading software, and I'd like to trade the futures, and so we got to figure that out. In the meantime, though, let's move on over to Dow Jones, even looking more bullish than the SP 500. The Dow is looking prime. So let me go ahead and do a much higher time frame looking at the algos. I've been looking at this for weeks. I can tell you it's just bullish. It's just all it is, just bullish. So if that's the case, then my targets would be, now V the Grill has been calling Dow 50,000 since quite a while, so it's probably coming because that guy's almost always right. But 43,790, 44,820 are the next targets I have, and the price action's more or less going to be the same as it was on the SP 500. Now the NASDAQ is a little different because you have this all-time high sitting at 20,869. So I'd be a little careful with that, but for a higher time frame look, I would use the same tools. Even though there's a pullback in this on a high time frame, that's going to be the impulse, as it were. Look, a good target's going to be right below the all-time high. Now, it might take a little while to get there. If we were to just use the trajectory going back to the beginning of September, you're looking at towards the end of October, but price could actually go sideways for a fair time before it does that, so maybe another month or so. But if I were trying to take some money out and just, take a little profit, lock in a little money, I'd probably do so at about 20,800. I'd front run that prior high from back in July. If I were not not worried about that, and I had a very high conviction that price was going to break the all-time highs for the nasty NASDAQ, then I would be looking at about 21,600. It's underperformed recently. Usually when something underperforms, it's going to catch up when it comes to these large indexes. So I would be watching that pretty carefully. It might be where the actual value is to trade something that's been underperforming, but you want to make sure that you're doing so once that market is healthy, and it may still be cooling off from outperforming everybody else for quite a long time. NASDAQ was outperforming, now it's maybe taking a break. So when does that break over? Well, the charts will tell us when that time comes. So this might be not a bad time to do it. We'll see about it. This thing could go sideways for like another 6 months. We don't really know what's going to happen. Let's take a look at Bitcoin. Everybody must understand, like, we don't know for a fact what's going to happen, right? We're all just making estimates, and then we just make sure that we're right more often than we're wrong, and we also make sure to win more than we lose. So I might risk, say, $500 to make 1,000, right? We want to have asymmetrical bets, if you will. So Bitcoin is now in a bit of a downtrend on this time frame, this 3-hour time frame. Not a lot has changed since last week, but basically price is just kind of flopping around in this area. Look, the Democrats have not made very strong statements as to being friendly to crypto. We're not really seeing a lot of love from that side of the aisle. So that being the case, I think that if the Democrats win, it might not do so well. I think they might start putting in laws that are not friendly to crypto. Now, Democrats are in now, and the laws have gotten a little more friendly, so I might be more concerned than I should be, but let's just see what happens. It might be everything's fine, but right as of now, price is in a downtrend, right? And price is going to probably go sideways until the election. And that was my whole point about talking about Democrats, right? Because again, the Republicans are very clearly friendly to crypto, openly friendly. Democrats not so much. So the market might be kind of waiting to make any major moves until the election. That's the whole point. I don't care what side of the aisle you're on. It doesn't matter how you're voting. It doesn't matter any of that. What matters is the market's perception of what's going on in the elections. So don't use this as some kind of stupid political statement. In the end, it doesn't matter if you're trying to make money. Markets are markets. Now, price has been more or less of a higher time frame downtrend going on since March, but that looks like a giant pull flag, which would be normally bullish. Price is just kind of in this channel, if you will, high time frame with a pretty clear top bound and a relatively clear lower bound, with the exception of the August Japanese yen dump where everybody freaked out. But until then, price is relatively stable in this corridor, and the high time frame is still pretty bullish. The ultra high time frame is still pretty bullish on Bitcoin. We're still in the middle of the bull market. Supposedly, there's always that chance that 74,000 was the high, but I don't think that's going to be the case. If I had to take a guess at it, I'd say 95,000 is the lowest high of this cycle, right? It might go above 100,000, but I think we might see a high at 95,000. And then due to things I've talked about in prior videos, it might be the end of the move. And that's an unpopular opinion, but it's just an opinion that I have, and it might be suppressed under 100K. Now, if I were just going based on the math and not worried about any kind of suppression, I'd be looking at between $160,000 to $200,000 is the high, but there are issues, right? I don't want to go too deep into those, but what we will talk about is what might happen this week. And what might happen this week is going to be either a breakout of this area, and this may well happen right now, because again, this looks like just another bull flag. And if that does happen, then the top of this bull flag from a Fibonacci standpoint might end up around the all-time high. The hurdles that it has to overcome if this breaks out are going to be 272, which is about 70,000. And then each of these highs is going to matter, but as you get higher and higher, the only one I'm really paying attention to is going to be this 74,000. Once it breaks that, then I'm pretty confident price will continue up. In the meantime, though, it's in a downtrend, and the next place it has to go, if it doesn't break out now, is going to be down, I think, to about 57,000. So that would be kind of the bearish case for the week, is a price heading down to 57,000. Bullish case of the week, I would say 66,000. Unless it really starts to pump very hard and very fast, I'd say the bullish case is 66,000 by Friday. Bearish case would be closer to 57,000 by that same period. So we'll see about it. I mean, that's about the right amount of move for a week in Bitcoin in the current environment. Again, it's going to be a short week, not a lot of volatility. We'll take a brief look at Solana. Solana's holding strong. I think a good deal for Solana is going to be $133, but if Bitcoin really starts to fall hard, a really good deal is like $120. And that's given that we're still in kind of the bull market, the price of everything doesn't continue to fall. And as long as 90% of crypto is concerned, and I mean the smart people, is that we're not done with the bull market yet. There's always that chance it keeps falling, but if it does not continue to keep falling, these are good deals for me. 133 and about 120, I'd look at those. Now, if Solana can break 162, that probably means Bitcoin is 66 or breaking 66,000. And the next level up, I'd be interested selling, taking a little bit of profit would be about 188. And if it breaks 188, that probably means that Bitcoin's breaking 72. And if Solana breaks 210, it probably means Bitcoin has broken 74,000. So it's just kind of the way everything works in this current environment until Bitcoin is really done sort of consolidating. Everything is just going to follow Bitcoin and be sort of a leveraged version of it. All right, I do hope this was a helpful review. We're going to do one of these every Sunday, so please keep your eye out for that. If you have any questions or any kind of request, just ask me in the comments. Say you want to see this, you want to see that. We do it all. We do stocks, we do metals, we do you name it. So just ask for it and I will chart it for you. Join us live every weekday morning that is not a holiday, and we do this at 8:30 AM EST. We go through what's going to happen, or at least what we think is going to happen for the day, and sometimes I actually take trades based on that. So that's actually really fun to watch. It's quick, it's 10 minutes. You can always watch the videos afterwards if you don't have time to see it live. But come on, check us out, algofactory.tech. We help people build their own trading algos. We don't have to know how to code or anything like that, but we can help you build a trading plan that'll help you trade like the hedge fund pros. That's what we're trying to do. And a lot of people, including myself, are at a point where now we're automating our trades. So you see those tabs and exit logs and all that on the screen. That's part of an automation. I have this automated if I really want to trade it that way. I'm still refining the data, still trying to find the best circumstances to trade it, and it's all in Forex and not crypto when I do run those algos. But that's all there, right? So again, to do this, you don't have to know how to code. If you want them coded, you just pay a coder to do it. But the building of the algo is what takes the skill. And we teach you how to do it. It's not rocket science, and we do hope to see you over there at algofactory.tech. See you there.